Okay, let's talk about WW International. The company most people still think of as Weight Watchers, they've just filed for Chapter 11 bankruptcy.
That's right. A pretty significant development.
Yeah, absolutely. So today we're going to unpack what led to this, look at their plan to restructure, what it means for members, the industry, and really where they go from here.
It's a complex situation with a lot of moving parts.
Definitely. And if you find this kind of breakdown helpful, please do hit that like button and subscribe. It really helps us out.
So the filing itself happened on May 6th, 2025. They filed in Delaware.
Okay.
And the main goal here is tackling their debt, which is substantial, around $1.15 billion in secured debt.
Wow. $1.15 billion. That's a lot.
It is. They do have what's called a restructuring support agreement, basically an agreement with their major creditors already in place.
Ah, so that helps speed things up.
Exactly. They're calling it a prepackaged filing. The idea is to get through the reorganization relatively quickly, maybe even within 45 days, and keep disruptions minimal.
Makes sense. So why did it come to this? Obviously the debt, but what else?
Well, the debt is the big headline figure, $1.15 billion. But it's tied into other problems. Their subscriber number has been falling.
Right, I saw something about that.
Yeah, a 14.2% drop just in the first quarter of 2025.
Ouch.
Which, translates directly to revenue loss. They reported a net loss of about $72.6 million for that same quarter.
So less money coming in, huge debt, not a great combination.
Not at all. And then you layer on top the competition. The whole weight management market has just exploded with new options.
You mean things like Ozempic and Wegovy, the GLP-1 drugs?
Precisely. Those medications have really shifted the landscape. People are looking at these, medical solutions rather than just traditional diet programs.
And Weight Watchers model is very much that traditional approach, right? Points, meetings, behavioral changes.
Historically, yes. And it's not just the drugs. You've also got tons of free online programs, fitness trackers, apps. It's just a much tougher market to compete in now.
Okay, so back to the bankruptcy plan. You mentioned it's prepackaged. What does the actual restructuring look like? Who gets paid?
Right. So the plan aims to make sure vendors and unsecured creditors get paid in full. That's important for keeping the business running smoothly.
Okay, good. What about shareholders?
Oh, well, that's where it gets tougher. The plan details how equity, shares in the reorganized company will be distributed. And it suggests current equity holders could face pretty significant losses.
Right. That often happens in Chapter 11.
It does. The main goal, though, is slashing that debt load. They expect it to cut their annual interest payments by about $50 million.
That's a decent chunk of change.
Absolutely. It should give them more breathing room. They're also extending the deadlines, the maturities on the remaining debt, and they get to keep $175 million they'd already drawn from a credit line.
But this all needs a judge's sign-off.
Yes, absolutely. The bankruptcy court has the final say.
And what about the members? People currently using Weight Watchers, what happens to them?
WW International has been very clear that for now, operations continue as normal. They have over 3 million members worldwide.
So meetings, the app, the points, that all stays the same.
That's the message.
Yeah.
No immediate impact. They plan to come out of this still as a publicly traded company, just hopefully on much stronger financial footing.
It really feels like this is about more than just finances, though. It's about a fundamental shift in how people are thinking about weight loss.
You've hit the nail on the head. There's been a dramatic shift away from, traditional calorie counting, point systems, behavior modification, towards medical options.
Like the GLP-1s we mentioned, or even surgery.
Exactly. People seem to be favoring faster, more sort of clinical approaches now.
So how is Weight Watchers trying to respond to that? Because just cutting debt doesn't fix the underlying market change.
Right. They have been trying to adapt. They've been repositioning themselves more as a general wellness company, not just weight loss.
Okay.
And they've moved into telehealth. They actually acquired a company called Sequence.
Oh, right. I remember that.
Yeah, they rebranded it as Weight Watchers Clinic. And through that, they actually are offering access to weight loss injections, those same GLP-1 drugs.
So they're trying to embrace the medical side too.
They are. They're trying to integrate it. But despite those efforts, the core subscription business, the traditional model, has still been struggling.
And there was a leadership change recently too, wasn't there?
Yes. The previous CEO, Suma Sistani, left. Tara Comante, who used to be at Shake Shack, actually, has taken over. So she's inheriting this challenging situation, including managing that telehealth platform.
Quite the task. So what's the outlook now post-bankruptcy filing? What are they saying?
Well, the new CEO, Tarcamonte, is expressing optimism, naturally. She's saying the restructuring will give them the flexibility they need to innovate and reinvest.
Innovate where? Digital, telehealth.
Both, it seems. They want to speed up improvements to their digital apps and the overall member experience, and definitely expand the telehealth business.
Is the telehealth side actually growing?
Apparently so. They reported 57% year-over-year revenue growth for that division in Q1 2025. So that's a bright spot.
Okay, 57% growth is not insignificant.
No, it's definitely something they want to build on. The company keeps emphasizing its commitment to trusted, science-backed, and holistic solutions, grounded in their traditional community support model.
But can they successfully pivot? That's the big question, right? A company so rooted in one approach, trying to adapt to this huge medical shift.
That is the million-dollar question, or perhaps the billion-dollar question, given their debt. Their long-term survival really depends on whether they can truly adapt to where the market and consumers are heading, especially with this demand for medical solutions.
And the market seems skeptical. I saw the stock price took a hit.
Oh yeah, the stock dropped significantly after the announcement. It reflects the uncertainty and the challenges ahead. This whole situation, the bankruptcy, it really underscores just how much the weight management industry is changing because of these new medical treatments and shifting attitudes.
It really does. Seeing how fast things are moving with medical weight loss, it definitely makes you wonder, what does the future hold for the more traditional non-medical weight management programs? What will their role even look like down the line?
That's a fascinating question to ponder. The landscape is definitely being reshaped.
Indeed. Well, thank you for walking through all of this with me. It's a lot to take in.
My pleasure. It's a story that's still unfolding.
Absolutely. And for everyone listening, if you found this discussion insightful, please remember to like and subscribe. We appreciate your support.